Profitability. It's something that we all strive for as traders. It's the reason why we trade. It's to make money, to quit our 9 to 5 jobs, it's the ultimate goal. Being profitable as a trader, you've made it, you've done it. And trading over the last 10 years and specifically over the last 4 years, I can really distill down what made me profitable into 3 main points. And I do want to share those with you because I think if all of you do apply some kind of aspect to this in your trading, your strike rate, the amount of money that you make should increase because it did it for me. And I just want to share what worked for me so that you guys have to do less playing around with what I've had to do. ICT goes through hundreds of concepts. I've learned every single one of them, and a couple of them really stood out to me, and a couple of them really delivered strongly from like a results perspective. I'm talking about trading prop firms and making money. So let's dive right into it. Let's talk about all three. Point number 3 here is going to be the best one out of all, but I am going to leave that for last just because it is going to take a bit more explaining than the rest of them. And I feel like point number 1 and 2 is going to be a prerequisite to understand point number 3 there. So let's dive right into it and let's use today's price action to illustrate these 3 points. Okay. So point number 1, we're going to call it understanding true liquidity. Okay. As a trader, if you do not know where price is going to, then you are gambling. You have to have an idea, where is the draw? And the easiest way to understand where the draw is through this one little small concept that I picked up from ICT a couple of months or years ago. And that is understanding where are the smooth levels of the market. They're denoted from ICT and from other traders as relative equal highs, relative equal lows, and you have to find where these are. And ICT dropped this term and it really resonated with me. And it's every time you go to a cottage, you pass by a lake that's very smooth, no ripples, no waves, nothing. What's your first instinct? You want to grab a pebble and you want to disturb it. You want to either skip it, you want to break that water tension, you want to disturb it. And this is how the market acts. It wants to find these areas of smoothness and it wants to disrupt them. And I use this in my trading every single day. I look for these relative equal highs, lows, and that is usually my draw on liquidity, coupled with a couple of other things. But again, that is the heavy contender when it comes to understanding where price wants to go. So let's dive into today's price action. And I'm going to show you a couple of key levels that is ultimately minor and major buy side liquidity using this term of true liquidity and smooth lows. So before market opens, we got some smooth lows here. We got some smooth lows here that price took out. And I think the best example of smooth lows is going to be the lows that it created right here. So you can see around 1120 today, it created its first low. And then after that, it started creating higher lows here. But you can see each of these lows that it created, it never pierced the previous low. And this right here of what you see, this is liquidity just asking for the rock to be thrown in that pond or that lake and is being disturbed. And this was actually one of my confluence factors of me taking a short that I'm going to talk about a bit later today. But this was a draw on liquidity. So in your trading, try to find those smooth areas where price created, engineered, left, and then try to find a point where it might reverse and attack those areas. So point number 1, understanding where that is. If you don't know where price is going to, if you don't know the inefficiency or liquidity it's trading towards, don't trade. Lock yourself out, go for a trade the next session. Don't trade because you will be gambling if you don't know where price is going to, or at least have an idea where price wants to go to. Okay. Point number 2 is using the right fair value gaps. So within the trading session, there's hundreds of fair value gaps that form. But I think if you understand the key fair value gaps and really cherry pick what you're using to create your trades, your stop losses, and your profit targets, this should accelerate your knowledge of fair value gaps and increase the profits in your strike rate. So we're going to break this down into 3 main points. We're going to call it 2A, 2B, and 2C. So the right fair value gap when it comes to 2A here is the first presentation. So we're going to call it, first presentation fair value gap. Very simple. As the name states, it's the very first presented fair value gap when it comes to a session. I really like the first fair value gap that forms after 930. So you can see here today, 931, the first one formed after a true displacement. Very important. It can't be like a little small one within like a consolidated range. It has to displace away from an area. It has to be the first one of the session. And that is the fair value gap that you will use for your trades later on that day. And you can see here, later in that day, you can see how nicely price reacted to it once. Here, it just shot right through it. In the afternoon, you can see once, twice, 3 times, it trying to break above. And then finally, when it did, again, it's being used as that support and resistance level, dynamic support and resistance level. Okay, so start using that. You can also use it for the afternoon sessions. You can see here at 1:30 in the afternoon session, I'm looking for the very first presented fair value gap with true displacement. You can see here, the very first one is going to be not this one right here, because it's still in the range of the afternoon price action, but it's going to be the first fair value gap that displaced away from it. So it's going to be right here. This here on the 146 candle, that is the first presentation fair value gap of the afternoon session. And you can see here, price created it, it traded into it, it tried to break above it, but it failed to do so. And then it started collapsing lower by breaking the first presentation fair value gap. And that's actually the logic that I took to take this trade. I took that liquidity that we talked about a second ago. I used the afternoon first presentation along with the 9:30 first presentation, and my stop loss was very well protected, targeting the liquidity below us. So using those fair value gaps increases your strike rate and it protects your stop that much better than your regular fair value gap. Point 2B is going to be, if you are enjoying this video, feel free to drop a like and a comment. I really appreciate that as a creator. It really helps me out. And it just gives me the motivation to push out more content to you guys. And then point number 3, it's a bit more complicated, but all of you should be incorporating at least back testing on how it's going to impact your trades, is using the fair value gaps that form on daily quadrants. And what I mean by that is here on the right-hand side, we've got the daily chart. Okay. We got Thursday's candle, we got Friday's candle, and then we've got today's candle. And what I did is I took the quadrants from yesterday's wick. So it's the largest wick over the last couple of days that we're trading into. And you're going to transpose that into the 1 minute chart. And you can see here, if you find fair value gaps that lay on top, directly on top of these quadrant levels, they are very strong levels, and trading off of them with some kind of supporting narrative really helps accelerate and enable higher strike rate and bigger risk reward trades. So you can see here, we have a fair value gap that formed on this quadrant. You can see how nicely it's been, respecting it to the upside. And then finally, when it breaks it, again, price doesn't revisit again. It attempts to support, it breaks through. And again, that level gets left open indefinitely today. So do use these levels. It is going to, again, help you cherry pick the stronger fair value gaps out of all the fair value gaps. And the last point that I want to talk about today is going to be trading in the macros. So if you don't know what macros are, they're specific time-bound elements in the trading day that price tends to push to inefficiency or liquidity. And very simply, it's the last 10 minutes of the hour and the first 10 minutes of every hour. So you can see here, one of the first, using this rule, macros happens from 9:50 to 10:10. There's one from 10:50 to 11:10. You can see here during these macros, this is where price starts pushing. You can see my first couple of trades, it was based on this macro where I took it within it and price displaced lower. You can see here later on at 150 to 210, price, it created a Judas swing right before it and it displaced at 150 to the downside. So trading within these macros, and it really helps put weight on the term that ICT keeps saying, first time, then price. It's going to really help increase that strike rate. There's a couple more macros, like at 9:30, there's a macro, there's an 8:50 macro. And when it comes to the end of the day, there's a couple of macros from 3 o'clock all the way to 4:10. Again, I don't trade those too much. I'm not going to focus on them, but they do exist. And to help all of you, there is this great indicator that I found. It's actually called Macro Tracker On Chart by 2 Degrees. It helps you map them. And it's something that I use, again, as a reminder of when the macro is starting. We do know where they are, but it's nice to have them mapped automatically to your charts. And here's just a quick screenshot of Top Step of each of my 5 Top Step accounts, pulling in $750, being just under 4,000 USD for today's trading day for November the 17th. Again, notice a little profit, but again, consistency is king. Those are my main 3 points. Hopefully you guys learned something here. And hopefully, again, my ultimate goal here is for you guys to add something to your trading arsenal that's going to increase that strike rate. Let me know in the comments below if you guys use any of these or you guys are planning to use any of them. Again, let's get those strike rates up. Let's create some big fat payouts from our prop firms. Let's make them bleed. And without further ado, safe trading.